Good morning. This is Deborah DeBoer with North Shore-Barrington Association of Realtors. I am pleased to introduce this title to you because after last night, this seems to be an appropriate title. National Flood Insurance Program 101 for Realtors. And Marilyn Sucoe, I'm going to let you introduce yourself and tell everyone why you are an expert in this. And I'll turn over the screen to you then.
Hi, everyone. My name is Marilyn Sucoe. I'm with the Illinois Department of Natural Resources, Office of Water Resources. I work out of their Bartlett office and work specifically with the 6 counties in northeastern Illinois. We also have a position in Springfield that works with the remainder of the state. And I'll go through some more information in the slides about how the National Flood Insurance Program works in Illinois. But I have a background in floodplain management, been working essentially in floodplain management since graduating from the University of Illinois, so 30 plus years, and have been at the state now for 5.5 years. So getting started, I understand that floodplains and flood insurance is confusing. And they just went through a major overhaul of the flood insurance program, and so that has even added a little bit more confusion for realtors. So basic terms, most of you should be familiar with the first few. A firm is a flood insurance rate map. Floodplain can be referred to in many ways, but I will typically call it the regulatory floodplain because that is where, for example, mandatory flood insurance requirements apply and where local development regulations apply. If you really think about it, we all live in a floodplain. We just live in floodplains with varying levels of risk. And the regulatory floodplain is what is defined as an area that has a 1% annual chance of flooding over a 30-year mortgage. A building in that 1% annual risk area has a chance of flooding of about 26%. So we got to get people away from thinking about the 100-year flood. It is a 1% annual chance floodplain. The base flood elevation is what is the calculated elevation we believe the water would reach in that 1% chance event. Elevation certificates is a document used by lenders, produced by FEMA, that helps provide information about the elevations of structures and mechanicals and equipment in those structures. And then finally, letters of map amendment is something that I'll explain more, but they are used by FEMA to show corrections to the map, or in some cases to show that the map is correct and that a structure or property is in the floodplain. So they can be used for both. Who can buy flood insurance? Anyone can buy private flood insurance. Doesn't matter where they live. And if they are not in a community that has joined the National Flood Insurance Program, there are about 100 in Illinois with some mapped floodplain or regulatory floodplain that have not joined. For example, unincorporated Ford County is not a member of the NFIP. So anyone needing flood insurance in that community must buy private. It is available, the federal flood insurance is available for any community that is enrolled in the National Flood Insurance Program. There are 896 in Illinois. And for any building in that, or renters can buy contents only coverage. A few communities, like I mentioned, are not in the NFIP, But generally, if they're not in the NFIP, and I could have thrown in Lake and DuPage in that, but they generally do not have floodplain, map floodplain in their community. Or if they do, it's in golf courses or other open space. What is the NFIP? It is a voluntary federal insurance program that provides the flood insurance for property owners, provides floodplain management guidance, provides the flood insurance rate maps, and also is what allows a community access to federal disaster assistance for damages in floodplains. So if a community is not in the NFIP and they have damages from floodplains or from flooding, they would not have access to disaster assistance. To join, a community adopts the floodplain mapping and studies, adopts regulations that limit development in those flood hazards, and they're required to enforce those regulations for new construction as well as existing construction to prevent increased damages. It is an insurance program, so it does have a definition of what is a flood. And it is defined as a general or temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or 2 or more properties, one of which is either is your property, and then it could be the right of way or the neighbor's property. And it is defined as the overflow of inland waters or tidal waters, unusual or rapid accumulation of runoff of surface water from any source, and mud flows. There's also an allowance for the collapse or subsidence of land along a lake caused by waves that resulted from a flood. So, for example, when we've had situations where a dam breaks and there's severe erosion, I know that happened up in Wisconsin, and buildings, fell in. That was an example of a flood, versus if it is long-term erosion that's slowly eating away at a channel or a lake shore, that most likely will not be considered to have been caused by a flood, because it is just due to normal rises in the water level along the lake or along the river that causes general erosion. The one thing that I want to mention here is recently FEMA is starting to, or I should say the National Flood Insurance Program is starting to look at sanitary backups and basement flooding from like sump pump failures. If there's a general condition of flooding in the area, so that flooding that occurred in Cook County this last summer, those multiple events in South Cook County, unfortunately, majority of that area is not mapped floodplain, so almost no one had flood insurance policies with the NFIP, but the few that did were able to get NFIP payouts. So normally it's from surface water, but they are now looking at situations where there is general flooding in the entire area and sanitary sewers are backing up because they're combined sewers that are carrying storm water, or just there's so much infiltration into the system that they cause flooding. So if you have a client who contacts you and they did have flood insurance, they don't think they'll get a payout, it doesn't hurt to file the claim, and if it's denied, it's denied. But they should just go ahead and file. Again, anyone in an NFIP participating community can buy an NFIP policy. I mentioned we have the 896 participating in Illinois, and it can be a policy can be issued anywhere in that community. Doesn't matter if they're in the regulated mapped floodplain or anywhere, they can always get a policy. And now policies are based on many factors, Lenders typically require building coverage only or that the loan amount be covered. But the property owner can make a decision on what level of coverage they want. Of course, if they do not carry enough coverage, their payment or payout, if they have a claim, may be affected. And then again, I mentioned renters can get coverage for contents only. And I'll talk about this in a minute, but in general, policies for residential primary homes are going up at 18% a year. But if someone owns rental units or they own a secondary home, like a vacation home, those premiums are going up at a higher annual rate, and that's based on federal law. So again, when can I file a claim? Typically when water has entered through a window well, over the foundation, through a door window, from the surface. But now there is cases where it may be paid for sanitary backup or other flooding. I don't know that seepage through cracks would ever get paid. And the only way would be if that crack maybe occurred during that event. We've had situations in Lyle where the foundations were broken, for example. So water clearly came through. Okay. What does the NFIP insurance cover in basements? It's limited. I'm not going to go into this. You can pull it up if you ever need to get into the details. FEMA does have information on their website on what's covered in basements, but you can also see this slide. How does NFIP flood insurance differ from a typical homeowner policy coverage for flooding? So typically your homeowner policy is going to be a rider for backup coverage, sanitary backup coverage or sump pump. And one of the things we keep hearing anecdotally is someone will call their homeowner's insurance and say, I have had basement flooding. And the minute they say the word flooding, their insurance agent shuts them down and says, you don't have flood coverage. And it is just terminology. Instead, they need to be saying, I guess, my sump pump failed and my basement took on water, or my sanitary sewer backed up and I have water in my basement. But the minute they say the word flooding, they get shut down. But people should or can potentially get coverage through their through that extra rider. In the NFIP, again, you will have coverage in your basement. An NFIP policy can never be canceled. It's increasing in cost until they reach a full risk premium, but it cannot be canceled versus homeowner policies can be canceled after multiple claims. Premiums now in the NFIP are increasing based on claims history. And as I mentioned, residential policies have a maximum annual increase of 18%. And I believe secondary structures or non-residential can increase by as much as 25% per year until they reach full risk premiums. So how does flood insurance work? It is, again, confusing. What is an insurable property? It is a building that has two or more rigid walls with a fully secured roof permanently fixed to a site that is at least 51% above ground, and that does include manufactured homes. So here's just some typical examples. And even a large government building can be covered by a national flood insurance policy, but there are limits to coverage. So who must buy flood insurance? Um, Buildings or mobile homes in that special flood hazard area or the mapped regulatory floodplain. And it's required for buildings used as security for a federally backed loan. So that's where the lender is required to determine if the building is in a regulatory floodplain, and then they are required to make a flood insurance policy be carried for that. And again, they're just needing to cover what is that federally secured loan. So they don't have to require contents, and they don't have to require small deductibles. People can use larger deductibles to reduce the premiums, and people can just have the coverage for the loan amount. It may affect them when it comes to a claim, but that's what's required by the lender. So, how much coverage is required? It's the outstanding principal balance of the loan, maximum amount available under the NFIP. It's the lesser of those two amounts. So under a residential policy, the maximum is 250, non-residential 500,000, and condos is based on the number of units of the building. And I'm not going to go into condominiums. That is just more complicated. But if you have, for example, $1 million home, and you would then have to go and get private insurance to cover your loan amount over the 250,000 from the NFIP. How has flood insurance changed? So that in the last couple years, the number one bullet here is a really big change. Elevation certificates are not required to get a policy. In the past, they weren't required for older homes built generally before the 1978, but now they're not required for any policy. And that is because FEMA is now using a bunch of data provided to it by CoreLogic, and they can make a lot of or they know a lot about the properties between assessors, websites, between aerial photography, street view, and aerial imaging. They can make a lot of determinations of the risk of a property. But the other big part is homeowners can now complete parts of the elevation certificates themselves and submit it for insurance. So I will show those parts of the elevation certificate, or they can ask someone to help them complete the form. There is no more in or out as far as the mapped floodplain. So before it really was like a cliff. You were either in that shaded area and you might be paying $1,000 a year, and your neighbor who is sitting in a house a few feet away, just inches higher than you, would pay a policy of $400 a year because they were shown as out of the regulatory floodplain. Now it might be more of a $1,000 a year for one property and $800 a year for the other. So that property that's slightly higher may be paying less, but it will not be substantially less. And I'll talk a little bit more about some other factors. But Congress has required the NFIP to require true actuarial rates. So if you know anyone who's down in Florida or Carolinas, Texas, any of the coastal states, some of those people are starting to see flood insurance annual premiums going from $3,000, $4,000, $8,000, $10,000 a year. I think this is, well, of course, we've had companies going out of business in Florida with insurance, but flood insurance is going to be the next big problem for coastal states. If a policy lapses in coverage, or not transferred from the seller to the buyer, the cost will go immediately to the full risk rating. This is super critical for realtors to understand this. If someone has a current policy and it is going up at 18% a year, so let's say they're paying $1,000, but the full risk premium is $2,000, they are going up at 18% a year. If they do not transfer that policy to the buyer, when the buyer gets their quote, it will be for $2,000. So they can transfer it to allow at least a few years of that glide path to the full risk premium. The factors that are being considered are things like distance to a flooding source. Are you a riverine floodplain or a coastal floodplain? How high are you as far as the general area? So they're trying to get at, are you going to be flooding in a 10% annual chance flood, a 25% annual chance flood, or a 1% annual chance flood? Like what is your risk? If you're really low in that floodplain, you're going to flood more frequently. So if you're directly on the bank of the Fox River in the lowest area, you might flood more frequently than someone who sits, 5 feet higher than you, still in the floodplain, but quite a bit higher, so has less risk of flooding. Again, I mentioned previous claims, and replacement cost of the home is now being considered, which is a huge equity consideration. So if a foot of water floods $1 million home, the cost to repair that is clearly not the same as a home that is only worth $150,000. So they are finally starting to give some equity to that. And then there are communities that are part of a flood insurance discount program through the National Flood Insurance Program called the Community Rating System. I'm missing a word there. We have 72 communities in Illinois that participate, quite a number in Lake and DuPage and McHenry counties, both Lake County unincorporated, McHenry County, and DuPage County. All three of those counties all participate in the program for the unincorporated. So they do provide some discounts to communities. Glenview, for example, participates, and maybe Winnetka, but there are a number along the shoreline. Other factors are type of construction, foundation type, first floor height. So is the first floor where the majority of the damages occur, is that elevated? Basement flooding, of course, is impactful, but it's really when water hits that first floor where the kitchen and bathrooms are that things start getting more expensive. We've already talked about this, but basement coverage will not cover improvements and personal belongings in a basement. So understanding the floodplain, essentially showing here normal stream flow. Now we get into flood conditions, and the deeper center portion of a floodplain is called the floodway. And sometimes people interchange floodway and floodplain. And a floodway is just a portion of the floodplain, and it really is a factor when it comes to permitting improvements in the floodplain, because we are very restrictive on what is allowed in the floodway, including no new buildings except for like a garage or shed if there's an existing home on the property. So mandatory purchase. You guys can look at this slide. I did provide a PDF of this that can be sent to people who attend. But, structure A is shown to be outside of the mapped floodplain shown in blue. So that structure is not required to carry flood insurance. Now, a lender, if the property boundaries are that rectangle, they may say it's too close to call. We are going to require insurance. And if that's the case, that's where I can help that all property owner pursue a letter of map amendment, which I'll show you in a minute. Property B is shown in the map floodplain, but it's on naturally high ground. They're sitting on a high area that was naturally there, wasn't filled in order to create that high ground. So again, that homeowner might be able to pursue a letter of map amendment, and the lender may say no, flood insurance is required, but it is the lender's choice. It's their risk, and they can still choose to have flood insurance required. And then, there are a few other examples here. Number F, or letter F, this structure was placed on fill that was placed in the floodplain, and there is an option to pursue something called a letter of map revision based on fill. The community must make sure that the fill and the style of construction maintains that home is safe from future flooding. But it is possible to achieve that. All right, so understanding the flood insurance rate map. This is what in northeastern Illinois, what all the floodplain mapping generally looks like. So the entire blue shaded area is that regulatory floodplain where the mandatory flood insurance requirement resides. Within this floodplain, there is a red and blue crosshatched area. That is the floodway. And then that outer area we refer to as the flood fringe. There's a orange shaded area. That is the 0.2% chance floodplain. And there is no mandatory purchase requirement there. And then the zone X unshaded is just all the other area where the mandatory purchase requirements don't apply. Just another picture, just showing you just how much more detailed these maps are getting. And with the aerial images now, it's much easier to see which buildings are not in that regulatory floodplain. This is just an example from Downers Grove of the mapping as it proceeds through their downtown. New to Illinois in the last 4 years is velocity zones, representing the velocity of waves on Lake Michigan. And so now we are affected by these B zones. And for the most part, in Lake County, I don't believe there are any buildings affected, but there are quite a few in Cook County, including some condominiums, buildings on the Northwestern campus, for example. And so that's just a new floodplain. This is what we mean by these velocity zones. And so it is trying to gauge how much that wave height and the velocity caused by the wave action out on the lake affects homes. So where can you find floodplain maps? County GIS and DuPage Lake, McHenry all have a layer. That's a picture there from Lake County where you can open up the stack of paper icon, which is the layer list, and you can turn on the National Flood Hazard Layer. It's nice because the parcel boundaries are also shown, and you can look at different aerial maps. The National Flood Hazard Layer is also the next source, and that is the source of the data for DuPage Lake and McHenry. Cook County does not have the floodplain layer on their GIS. And then, of course, there's two other options there, which I'm going to talk about. So the FEMA Map Service Center, you can put in an address, or you can look through the drop-down menus for search all products to get at it. Most people are just going to enter in an address. So, for example, here's an address in Joliet. And then once you're there, you can either print a map image and download a map image, or you can print what's called a fermet, which is just a small image of that property on the floodplain map, or you can go directly to the National Flood Hazard Layer Viewer. If you're ever not in northeastern Illinois, there are about 20 counties in Illinois that still do not have digital maps. So if you were to ever look up a property, and you'll notice here there's no link to the National Flood Hazard Layer Viewer, and the map just shows a bunch of green dots, you would have to instead go to the download the firm panel, because they are still on paper maps. And then this is an example of what you would see if you're looking at the old paper maps. This is the National Flood Hazard Layer Viewer. You would enter the address in, and it would take you roughly to the property. That's why using the county GIS is even better, because usually they don't make mistakes in locating exactly where the building is. So here's the building that I'm looking at, 303 Northeastern Avenue in Joliet. So this building is showing as being partially in that regulatory floodplain, but it is right on the edge. So under the National Flood Hazard Layer Viewer, under that layer list, that stack of papers, you open it up, click on the gray arrow next to National Flood Hazard Layer, open up all the layers, and you can turn on something called LOMAs, which I mentioned is a way for FEMA to tell you if a property might be actually higher than the floodplain, or it can tell you whether it is in the floodplain definitively. So in this case, when you turn on that LOMA layer, there is a purple dot on that building. You can then click on that purple dot, and you can directly download the letter of map amendment. And here's just more examples of that. So here is that letter of map amendment for that house at 303 Northeastern Avenue. And FEMA issued a LOMA, and it says it's a letter of map amendment determination document removal. And then down at the middle of the bottom, it says outcome, what is removed, the structure was removed. So this could be then submitted to a lender to request that flood insurance be not required for a loan on this property. A lender does not have to accept it, though. A lender could say, no, we still feel that there's a risk. And I think we've all seen where flooding is getting worse, and we are having some pretty intense storms. And many of our floodplains are based on old data. So people should still probably consider carrying policies, even if they have a LOMA. Just another example here of a property in Joliet where, in this case, the LOMA was issued for the entire property. So down here along the bottom, it tells you the outcome is the property was removed, tells you the 1% annual chance flood elevation is 545.9, and the lowest ground elevation for the lot is 546.1. So it's just 0.2 of a foot or a few inches higher but they removed the entire property. By doing this, they can also then go to Joliet and pull a building permit to add an addition or add an accessory structure. And so they remove the entire property, they will not have an issue with permitting. Another example, this is in Joliet as well. And in this case, there must be multiple buildings on the property, and only the south building has been removed. So make sure you read what the outcome is. This is just talking about older letters of map amendment have to be revalidated. So Joliet got new maps in 2019, and old letters of map amendment from 2018, 2014, 2010, they have to show that they were revalidated. So in this case, you look down at that pop-up screen, scroll down, and it says this letter of map change, LOMAC, has been revalidated for the revised firm. And so you know that it is revalidated and still LOMA. This just shows from the Map Service Center. You can also get to all 12 letters of map change currently showing for Joliet. And so there they are under effective products. And when you open it up, you will see 10 LOMAs and 2 revalidation letters, one from 2014 and another one from 2019. And so when you open that up, that revalidation letter, it shows you that property there on Dover, the second LOMA that I showed. It has it listed there and shows that it was revalidated back in 2019. Not all LOMAs are approved. So here's going to be an example of a denial. Sure, there we go. So up in the top right-hand corner, it says LOMA-DEN. And the bold letters in the top middle, it says determination document non-removal. And then the outcome, it says what is not removed from the floodplain, and that is the structure. They look identical, so you have to read to notice that this is a denial. Unfortunately, I wish it had a different format, but the form letter looks the same. So what is an elevation certificate? Let's see where I'm, oh goodness, 20 minutes to go. So it is prepared typically by a land surveyor professional, but for insurance only, sections E and F can now be completed by the property owner. Documents the elevation of the building compared to the base flood elevation, can be used to apply for the LOMA, can be used to get more accurate premiums for flood insurance. And agents will always typically ask for them, and insurance agents, and they just need to be told it's not required. They're still stuck in the ways of the past, and they keep asking for them. So on the elevation certificate form, I want to point out that when a surveyor is completing this detailed elevation information, 2 of the critical points of elevation are this lowest adjacent grade and the lowest adjacent grade of any deck, stairs, or other structural supports for the house. If the ground elevation at those 2 points is lower than the base flood elevation, the structure will be considered in the regulatory floodplain. And here's just an example of a deck that is attached to the home, which has supports that go down into the river, and the grade at those deck supports or what is used to determine whether that house is in the floodplain. What I've seen happening now is we are having large buildings come in, and now these elaborate outside decks with multiple levels are being constructed, and they stretch further away from the house to lower ground, and those decks can inadvertently bring the house into the mapped floodplain. This is the section E I mentioned, where a survey is not required. Section E is only for these specific zones AO and zone A without any base flood elevation. And so this can be completed, and I'll show a little information about how this section can be completed. And a local official must certify this information in section G. This is section F. If somebody else completes the form, helps the property owner complete it. Maybe they have a contractor who's helping them, or a friend helps them. Section H is the section that's for insurance only. It can't be used to get a letter of map amendment. This is when a homeowner or someone helping them fills this out. And all it's asking for them to do is to tell them how many feet the top floor, in this case, is above the lowest adjacent grade. And I'm going to show you an example of how to take those measurements for the basement floor, which is what's asked for in section E. This says the top of the bottom floor, including basement, is so many feet below the highest adjacent grade, or so many feet below the lowest adjacent grade. And so you can also take a measurement for how high the first floor is above the lowest adjacent grade. So here's just an example of how to take the measurements for E. I need to add one for H. So you go outside, you find your highest adjacent grade, you measure up to the top of the foundation. So in this case, the foundation is 1 foot above the highest adjacent grade. You go down into the basement. You then measure from that top of foundation down to the basement floor. And the basement floor is 7 feet, 5 3/4 inches. So you take the highest adjacent grade, add a foot to get to the top of the foundation, subtract the 7.48 feet to get to the basement floor, and you know now that the floor, the lowest floor, is 6.48 feet below the highest adjacent grade. And, so then here's just my example for H, where you're just measuring this. Is the first floor is a foot above the highest adjacent grade. That's actually the foundation. The floor would be another few inches higher. But you're just basically going out and taking a measurement with measuring tapes. So wrapping up our discussion here, floodplain damage claims in Illinois, 92% of them are now occurring outside of the mapped floodplain. This flooding this last summer in Cook County, nearly all of that flooding occurred outside of the mapped floodplain. We do not have good floodplain mapping of urban flooding. We are focused on riverine flooding, and as we are having more and more issues with urban flooding, these intense rainfall events that overwhelm storm sewers and local drainage, we are just seeing more and more flooding occurring outside of the mapped floodplain. And as I mentioned, We have, in some cases, very old maps that might still be from the 1970s or 1980s and have not been modified to address current topography, all the development that has occurred in the last 40 years throughout the Chicagoland area that has increased runoff and addressed the changes in rainfall in the mapping. The climate study done by the University of Illinois basically says that despite better floodplain mapping and stronger regulations, flood damages due to climate change continues to increase in Illinois. And our annual rainfall has increased from 35.5 to 40 inches since in basically over the last 100 plus years. So we are having more annual rainfall, and they're coming in fewer, more intense storms. And we were predicted to see an increase in flood causing precipitation of 31%. So in summary, all buildings are at risk of flooding if it rains enough. Only buildings in the regulatory floodplain are typically required flood insurance. Homeowner policies typically do not cover damages from surface flooding. Homeowner policies will cover basement flooding from sanitary sewer backups or sump pump failures if people have carried that extra endorsement. Urban flooding caused by storm sewers backing up, street flooding, and sanitary backups is not shown on floodplain maps. And private flood insurance policies are available and oftentimes will have lower premiums, but people should read the fine print and make sure they know what that policy is going to cover. And here I'm Marilyn Sucoe. That's my contact information. The state floodplain coordinator is Erin Conley, and then the FEMA contact is Michelle Staff. And that is it.
Does anybody have any questions? Then Marilyn, I want to thank you. I thought this was fascinating. I had no idea how much is involved when people are deciding what is or isn't in the floodplain. So thank you very much for sending me this. You've already sent me your PowerPoint, which I will send out to everybody who was here. And we will be posting this because I think this is something our realtors need to know about. We have a lot of property that fronts waterfront someplace or another. So thank you again very much for Marilyn for spending your time with us.
Can I ask a question?
We have one question, Kim.
Okay, I noticed you said if the policy lapses, it's not transferable. I can't remember the slide, and there were not numbered, and I'm trying to listen and watch at the same time.
So they can be transferred.
Okay.
The owner has to transfer it to the buyer and not have any lapse. So the owner needs to have their agent talk to the buyer's agent and make sure the paperwork is completed to transfer that policy into the buyer's name.
Okay.
Of course, yeah.
No, so if I'm working with because I worked with a client where they bought. I had the seller, and they were selling a property that was considered an 100-year-old floodplain area. I just want to make sure that this was not brought up. So the policy can be transferred to the new buyer, to the new owner, but it has to be done before the sale or at the sale or
at the sale. Yeah.
At the sale.
You know, because the lender wants that policy in place before the closing. Mm-hmm. So you would set that up to have that policy transfer happen. Mm-hmm. As part of that closing. So there is a form that the agent provides, and so there is that seamless transfer.
And you have that listed here again, the form?
I don't, but that's where an agent, if for some reason, I guess someone an agent didn't know how to do it,
Mhm.
we can provide you with the contact at FEMA insurance,
Okay.
to make sure you get that form. Um, or tell the agent what the name of the form is that they can, get it from the National Flood Insurance Program system.
Okay, but it has to be done before the transfer, before the final papers are
Yeah, I mean,
signed. Okay.
the like I said, most lenders require, proof of insurance before
Mhm.
the closing. So
Mhm.
you would set that up and have that form completed.
Right, but I think what I'm thinking with more and more problems as far as global warming and the floods that we're seeing and all of the damages and whatnot, people are going to be more, I guess, alert to this and I just want to make sure that I know it so I can make sure I'm watching for my clients and doing the best job possible for them in case this comes up.
Yeah, if you want to send me an email, I'll ask the, flood insurance liaison at FEMA what the name of the form is. I'll add it to my presentation, so that we have the name, so that you know the name of the form.
okay, and then you also mentioned early on there were recent major overhauls of the flood insurance program. Is that the list then that you brought on 2 slides later? I just wanted to make sure that I didn't miss something.
No, yeah, those
Okay,
were all.
all right.
I'll
Those,
switch back to all those different things that are
right.
being considered now. And the fact that they allow elevation certificates to be completed by homeowners
Mm-hmm.
themselves, to submit. Um,
Wait.
yeah, so like this type of stuff, type of occupancy, construction type, first floor height, those are all being considered. This one is replacement costs, and you'll get
Mm-hmm.
this presentation, the
Right.
PDF of it.
Okay,
But
great.
yeah, the replacement cost is probably one of the biggest, considerations now, because if someone had a $250,000 policy and their home was worth $250,000, they were paying the same premium as someone who had $1 million home with a $250,000 policy.
Mm-hmm.
Well, there's a good chance when that $1 million home got flooded with a foot of water, the cost was going to be way more.
Right.
Now, granted, they're going to cap out at 250, but that $250,000 house might only have had 80,000 in damages.
Right.
But they were paying the same premium as the $1 million house.
Mm-hmm.
So, I think that's a big change.
So they've adjusted that so it reflects more of an accuracy for the situation, as you said, for 150.
Yeah.
Right. Okay. Right.
Yeah.
Okay. Thank you. And thank you.
Sure.
I'll send you an email about that form.
Sure.
All right. Anybody
Thank you.
else with questions? Then again, Marilyn, I'm going to say thank you so much. It's been lovely to spend the morning with you. I learned a whole lot about flood insurance that I had no idea about. So thank you for your time and attention. I appreciate
You're
it.
welcome.